Bitcoin has failed twice this week to break out above $31,000. Data from Coinalyze shows futures traders are likely responsible for keeping the gains in check. Joining us now to discuss the crypto markets is Forex.com Global Head of Research, Matt Weller. Welcome, Matt.
Hey, thanks. Good to be here.
Awesome to have you here. Let's talk about this producer price index. Final demand increased 0.1% in June, suggesting inflation in the U.S. is likely to continue easing. What's your reaction here?
I think what it suggests is that inflation has continued to ease, and a lot of that is due to what are called base effects. Essentially, at this time last year, inflation was much higher. Now, as we look at the annual numbers, we're replacing those very high inflation numbers from last June with the lower, more reflective of the current environment numbers. So those base effects essentially turn from a headwind for inflation to a tailwind moving forward. So I wouldn't be surprised to see inflation start to tick up. But I think the essence of the question gets at what's really important for risk assets in the crypto market. And that's the idea that inflation has been declining more than expected. And that's something that could potentially signal the end of the Fed's rate hikes cycle as soon as after this month's very likely rate hike at the end of the month. So that could be a very bullish tailwind for risk assets, including cryptocurrencies.
Just looking back a bit further, so Bitcoin, I believe, is up over 80% since the beginning of the year. Like, that's a lot. What's that about, in your view?
The valuations got very compelling. It essentially was beaten down. You guys and I well know how dire the situation looked at the end of last year. And now that it appears that crypto's not going away, Bitcoin's not dead, as it's been proclaimed so many times, there's been a bit of a relief rally. And to me, it looks like a sort of early bull cycle behavior where we bounce off the lows, but now we're entering more of a consolidation, or what bulls would call a reaccumulation period, where the market's sort of pausing, catching its breath. Maybe we even do pull back further from here, but it's not the type of situation where we go back down and make new lows. And we're likely, especially when you consider the halving cycle, approaching another longer term bull market.
You know, we've had economists and analysts on this show calling for a recession near the end of this year or the beginning of next. Does your I guess, prediction remain the same? Do you still call this an early bull cycle if we hit a recession at the end of the year?
My view is that any potential recession would be much into 2024 rather than at the end of this year. But it's a very interesting point, especially given some of the economic data we've seen just this month, with non-farm payroll showing its first cracks, with CPI and now PPI today both coming in lower than expected. So if we do see that economic slowdown, I'm not even necessarily sure I'd call it a recession, emerge, that at the margin could be a bearish sign for Bitcoin and other crypto assets. But I think these longer term trends are the types of things that can endure through the recession. And as we all know by now, Bitcoin and crypto assets tend to march to the beat of their own drum, and therefore could actually be relatively well supported, even if we do see a recession affecting other risk assets.
So it's kind of been a news cycle of like all Bitcoin all the time. Any other tokens that are on your radar?
It's so Bitcoin and Ethereum are obviously the big two, but what's really interesting, in the chart just popped up there, is Bitcoin dominance. That's risen from 40% of the crypto market to 50% just in the first 6 months of the year. So there's a reason everyone's talking about Bitcoin. It's the biggest crypto asset, and it's becoming bigger both on an absolute and relative basis. And this is, again, something we see early in the bull market. Some of the smaller tokens that garner a lot of excitement toward the end of a bull market, the skepticism increases toward those as we enter crypto winter, as we have been in. And when traders realize Bitcoin, again, is not dead, that's when it starts to increase its dominance. And if we do enter a new bull cycle for an extended period of time, that's where the first sign of that will be if the Bitcoin dominance starts to roll over and we see some of those other crypto assets picking up pace. So far, we're not seeing that. The first place I'd be watching is Ethereum. And at the moment, the Bitcoin Ethereum ratio is still trending up, or the Ethereum relative to Bitcoin ratio is trending down, is the way it's most commonly seen. So that'll be the place to watch for a turning point that could signal the start of a quote unquote alt season.
Can you tell us a little bit more about your outlook when it comes to Ether? What are your predictions there?
I think it could see explosive moves if and when we enter the next bull cycle. What's really compelling to me is the supply and demand picture. We've seen since the merge, it's been about 300 days or so on an annualized basis. In the depths of a crypto winter with relatively little use of Ethereum, the supply has been declining at a 0.3% annual rate. What could be particularly compelling is if and when we revert to some of the levels we'd seen back in, say, 2017 or even 2021, when we're seeing a lot more usage, a lot more demand for Ether, that not only does increased demand, of course, potentially raise the price, but that also at the same time will be decreasing the supply potentially at a level of 1 or 2% per year. So you can kind of get that double whammy of increasing demand and decreasing supply. And as far as I can tell, that's sort of unique to all other risk assets. And that's why I think could be really compelling in the next bull cycle.
Matt, thank you very much for joining the show this morning.
My pleasure. Thanks for having me.
That was Forex.com Global Head of Research, Matt Weller.